Even if one can predict the economic trends, such as inflation, does that necessarily have portfolio implications? Will stock markets pay attention to it, or will they ignore it? That's a hard call. Of course, ways to play inflation can be to have exposure to commodities, commodity stocks, gold, some of the miners, the BHPs, Rios, that type of approach. On balance, what we do is keep a balance. That's important. We're managing portfolios, and we don't put all our eggs into one basket. So whether we tweak up commodities a little, that's possible. But of course, to an extent, they've already moved quite nicely. So there's some anticipation in the price.
You, you have a big exposure to India, and I wonder what you're doing with your India portfolio right now, given that it's almost a scene of bad news turning good news for the market. I mean, we've seen a sell-off. We've seen FIIs withdraw through the month of April, but this historic crisis, which has just hurt so many people in the country, is still not translating into worry for the markets. The markets year to date are holding up 7%. The rupee also has shown relative strength. And so are you surprised? And what are you doing?
A little surprised is the answer, but I suspect in the face of such a human tragedy, investors have looked back at what happened a year or 18 months ago in other markets where those markets collapsed. The scenes in Italy were frightening, and the UK came close to the brink as well. And then we've seen the sharp recovery. So I think investors are reluctant to sell and be caught short of markets. So by and large, they're hanging on. And I'm afraid we're in that camp as well. We still see lots of attraction long term in India. Could the market well go lower? Yes, it could. But we are long term investors, and we like the stocks we hold.